This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, April 24th, 2015. Euro dollar. So a lot of back and forth this week in the euro, with the market locked within a very well-defined tight consolidation over the past several sessions. At this point, the market is going to need to break above 1053 or back below the recent 12-year low at 104.62 for clearer directional bias. However, with the downtrend firmly intact, a lower top is favored somewhere below 1053 in favor of a bearish resumption below 104.62 and towards parity further down. Ultimately, only a break back above 1053 would compromise the immediate bearish outlook and take the pressure off the downside. Sterling dollar. So cable has enjoyed a very nice rally over the past several sessions out from recent multi-year lows at 145.65. But at this point, with the downtrend firmly intact, the market will need to take out 51.65 to take the immediate pressure off the downside. So in the interim, we're looking for a lower top to carve out somewhere ahead of 51.65 in favor of a bearish resumption. Dollar yen. Dollar yen remains locked within its multi-week, multi-month consolidation, largely confined between 118 and 122, though with the broader uptrend firmly intact, an eventual break above 122 is favored towards the 125 to 130 area further up. Until then, any setbacks are expected to be very well supported ahead of 118, while ultimately only back below 115.55 would compromise the intense bullish outlook for dollar yen. Euro Swiss. So Euro Swiss has seen a nice recovery this week after the market stalled out by fresh multi-week lows at 102.35, and the break back above 104 suggests that the market could be poised for a recovery back towards that high that we saw in February at 108.15. At this point, only a break back below that low at 102.35 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie has been locked within a multi-week consolidation just off those recent multi-year lows at 75.33, though with the downtrend firmly intact, a lower top is sought out in favor of a fresh downside break below 75.33 and towards the 70 area further down. At this point, only a break back above 79.38 would compromise the immediate bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD has seen some setbacks after the market broke down below some critical support at 23.50 the other week. This does open the door and set the stage for a potential downside extension towards the 119 area, though any additional declines below that level should be very well supported in favor of a medium-term higher low and bullish resumption back above 28.35 and towards the 2009 peak at 130.65 further up. Really only a weekly close below 119 would compromise the bullish structure for dollar CAD. Kiwi dollar. So Kiwi has done a good job recovering over the past several weeks, though this week we finally seen the market top out above 77. Ultimately, the downtrend remains firmly intact, and the recovery that we've seen over the past several weeks has been corrective in favor of a bearish resumption, eventually below 71.76 and towards the 65 area further down. At this point, only a pushback above 78.90 would compromise the bearish outlook. SPX 500. So the S&P 500 finally managed to trade back up to that record high from February at 2120, with the market maybe slightly eking out a fresh high beyond that 2120 high. But now that we've matched this high, it'll be interesting to see how the market responds. If we put in a weekly close above 2120 on Friday, this could open the door for a fresh upside extension towards the 2200 figure further up. However, inability to establish a close above 2120 would keep the topping outlook potentially intact, though we would need to see a break back below 2040 to confirm and open the door for an acceleration of declines. Gold. So gold has been in the process of pulling back a little bit over the past several sessions, though if the market can hold above 1178 on a close basis, this will keep the recovery outlook intact in favor of a push back above 1224 and towards the 1300 area further up. However, inability to hold above 1178 on a close basis will put the pressure back on the recent 2015 low that comes in around 1142, and more importantly, the 2014 base at 1131 further down.